Hello, active traders, and welcome to our Trading Week Ahead broadcast for today, September 4th, 2020. Great to see so many of you here. Really big turnout today. Great to see you here with the market selling off like a son of a gun. I've been making money trading our inverse ETFs, and I hope that you're doing even better. So, as always, all information is for educational use only. I'm not making advice or recommendations about what to buy, sell, or hold, and we are publishing this for educational use. You may have seen me speak at money show events as a Traders Expo speaker. And also, just a quick reminder, I do have my chat room available at tradingtheopen.com. Live classes 5 days a week, Monday through Friday from 8:45 or 9 o'clock until 10:30. And certainly encourage you to join if you're not yet a member. If you're new to working with me in the live room, it's just $7 for a 3-week trial. And currently, right now at least, we've got a sale on the annual membership for just $9.97. So that works out to less than $100 a month, which is a bargain for the quality of training that you'll get. So anyways, let's go ahead and get on with it. So I was trading this guy, TISA. Well, first of all, let's take a look at the stock market. It's sold off and it's trying to bounce. 2-day stair-stepping downtrend in the S&P means we got a lot of selling pressure out there, and we've seen relatively significant high volatility moves in the markets. The way that I've been profiting from it is trading instruments like SQQQ, which I sold earlier, by the way. You can see trade confirmations. I put on a lot of little chicken shit, small size trades early in the day, but again, this is to build a swing trade over the weekend into next week. So I bought, just a couple thousand worth of inverses for swing trades, and then this is all pre-market orders. These are all before the market opened down here, and then in market I had all these other orders today. In and out of SQQQs and UVXY and others. That's my complete order book for the day. I did pretty good, so up a few $100 on the day. SQQQ, I called it long for my members today at 22.7. When it was down here, I said, we go long if it gets over 22.7. All aboard. And that's exactly where I bought it. And I sold into the reversal up here. So anyway, a nice pullback in this guy, SQQQ, currently the most active traded instrument. Or was this morning. SQQQ are short Qs. It's how to short the NASDAQ, is to go long SQQQ. I both day and swing trade these guys most days, and today was no exception. I was in starting, my members are told 20.7 was a long alert yesterday. Today was 22.7. We had 100% winning alerts on our inverses lately, last day or two, and they've done really well, or close to 100%, I should say. It seems like it. Anyway, yesterday I called along at 20.7 for my members, and today I called along at 22.7. And it worked out great. So, a quick question. How many of you, if any of you, are trading the inverse ETFs, or at least are thinking about it? If you would, type in the letter Y or yes to signify you've got some interest in the inverses as well as regular equities. Because if we're due for a big beat down in the stock market next week or two, you might want to learn how to trade these. Just curious. Hey, thanks. Hey, French. How you doing, man? Thanks, Willie, Robert, George, Federico, Irina. Thanks. Thanks, Harold. Yeah, these are really good to trade when the market goes down. Just saying. So you don't have to short, you can just go long the inverses. Now the neat thing about these is that you can trade them by either the VIX futures contract, UVXY, which is good. I'm glad I sold this guy. You buy the dip, sell the rip. My long trigger on this was 28.7, and I told my members live we want to sell up near the 30, I think it was 30.7, 30.3. Anyway, it ran up nicely for us. 28.7 was the long trigger, and it ran all the way up to 32 before doing a A-shaped And if you're one of my live room members, you guys remember I told you to sell when it was up near 32 because that's how you trade this. You buy the dip, you sell the rip. So our long trigger worked out and it was a winner as well. SOXS ran all the way up there to 40, as high as 47. Tease is one of my favorite charts because I bought 1605 when it was down here. I told my traders, and you might want to learn this kind of thing, is that a bullish cut pattern. And I always buy right over whole numbers. In this case, I got in early. 1605 was our long trigger for our members. And see that in the answer key to the right. Those are the actual alerts that my members are given on a silver platter. And if you are a live room member, you too would be getting these alerts each morning as we go through these. So do be sure to join my live room at tradingtheopen.com. Try it. I've gotten a whole lot better over the last 20 years I've been running it. So better than ever, and a really opportune time to take advantage of these alerts. I mean, seriously, you could have done well. I made money trading this today. If you'd bought 1605, that's great. Now, like that UVXY chart, one of the things that I spend a lot of time teaching traders is how to exit while something's still in the money before the market takes it back. So, for example, if you bought my 1605 long trigger that's nicely in the money, where would you trail a stop if you were either swing or day? Well, let's make it for day trade it. Let's say you're doing intraday trading and you bought where I said to go long at 1605 this morning. Again, I mentioned that before the opening bell, so I give my members a complete trading plan with specific entries before each day's 9:30 opening bell. And again, it's for educational use only. Had you actually traded it, you could have made a F load of money, potentially. But anyway, 1605 ran all the way to 1775 or so. So a good 1.5 run for our small cap Russell short inverse ETF TESA. And it's up the biggest percentage gain on the day today. Really good directional play in that one. I'm currently long small size most of these inverses. But again, you buy the dip. I said to go long 22.7. You sell the rip. Buy the dip. Sell a big spike up, especially if it's gone. And I mentioned this to my traders, the average true range, or the previous day's trading range, was eclipsed by today's range on higher than average volume. Now, if you want to see why I'm all excited about SQQQ, I've shown my members the long-term daily swing trading chart. If that's not saying buy me, I don't know what is. Okay? I mean, seriously. But the trick with these guys is they're devilishly up and down and very difficult to navigate, kind of thread the eye of the needle with them for swing or day trade. So you need to have guidance and experience in your corner, and hopefully that's where I can come in and give you some insights. I've been trading inverse ETFs for over a decade, since before the flash crash of 12 years ago or whatever. So I know how to trade these. Anyway, this has plenty of upside potential. The March, when it sold during the March market sell-off, this was as high as $150, $160 a share. Now it's down at 25. That's SQQQ. We look at TESA, and it also has lots of upside. And the strategy on how to trade those is one thing I cover in the live room for everyone. Now there's the stock market. What do you think those two big honking red candles tells you? Well, look at what happened in the March sell-off. Two big red candles led to an upside surprise fake out rally. The market ran up for 6 months. So April, May, June, July, August, September. But now we're starting to get a beat down in September, and we're currently right above the 3,350 simple moving average line in the S&P, or 330 in this spider's chart. So support is at that red line at 330. Major support is at the 3,000, just above it at the 310 level. Anyway, do keep an eye on the moving averages as we move forward. The market's given back all of the past week's gains already in just 2 short sessions. And we may well see continued selling into next week as well. I made money today trading things like this, right? The SQQQ, UVXY. I'm day trading and swing trading in and out of these. And I'm busy. I'm a busy beaver. I trade. It's what I do. I'm a trader. With real money trade proof, P&L proof. That's my entire order book for the day. I bought this crap pre-market, just little itty bitty feeler trades. I was already in, I don't know, maybe $1,600 worth of inverses overnight. I doubled down on that pre-market successfully, and then I day traded in and out of these guys. Just little itty bitty odd lot, 20, 40, 50 shares here at a time today as well. So I made a few $100. I'm not up thousands of dollars, but I prefer trading small, trading often, and frequently, rather like Pac-Man, rather than trying to. It's like that old saying: how do you eat an elephant one bite at a time? How do you kick Wall Street's butt one trade at a time? Now, a non-ETF big winner for our members earlier today was this FNGR guy, or FNGD. I'm sorry. I called it long at 1020 back here. When I was up here, I told my traders to sell at 11 because that's the whole number. This illustrates a very critical trading strategy that I not only publish in Stocks and Commodities magazine, but use in my own trades and also in the live trading, the open live room experience. And that's called trading within the whole number. When it was down here, or actually down here, I said go long if it gets over 1020. Okay, and then once it got up to the 11, I said, right under 11, actually, I said sell it all here at like 1080, 1090. That's trading within the whole number region. You buy right above a whole number and you sell right under the nearest whole number. And that worked out really well for our members today. I called along at 1020 and the exit out near 1080, 1090. Now this late in the day, we would not want to do a bounce trade, but it is finding support at that 10 again. But you buy right up slightly above a whole number and then sell right under the nearest whole number. You do not, and I remember when it was up here, I told my traders, it doesn't do you any good if you bought at 1020 and you F up and sit on your hands and watch it go back down to 1020. Your goal as a trader is simple: to get paid, to make money. You don't do that if you F up, and don't use trailing stops, or don't trail stops when something's sharply in your favor, unless you happen to get lucky and it just runs up all day. But the other 98% of the time, you get the ups and the downs, and that's the challenge and the frustration of a trader, is how to navigate those. And I teach how to do that in my live room at Trading the Open 5 days a week. I've been running the live room since the year 2000, one of the longest running live rooms in history. I've trained tens of thousands of traders as a money show speaker. I'm a Stocks and Commodities magazine guy and author, contributing author, and much more. Anyway, if you want to join my live room, it's at tradingtheopen.com. If you're brand new, it's just $7. Either you can use PayPal or Visa or MasterCard, it's your choice. For a 3-week trial, it's only $7, and that's a bargain. And also, if you then want to upgrade, which a lot of people are doing this last week, especially, the annual membership is just $9.97. So it's less than $100 a month. And we don't cover, as a rule of thumb, we don't cover the crappy under $10 low float bullshit stocks that these guys who are making up, trying to say they're making thousands of dollars a day trading those, ask to see their tax return or some other proof, because they're full of shit and they're not actually really trading. Or they're doing mirror account trades with long and short accounts and all kinds of shenanigans. Don't trade stocks under $10 is my point. Learn how to trade things that are like $15, $20, $30 a share instead with me at Trading the Open. I've earned the world's trust by showing P&L proof. I sold TVIX at 940, my best exit in my life. Anyway, the point is, I'm a real trader. What's going on here? Apple. They took a bite out of Apple. We called it short at 118.7 earlier, and then we called the cover near, I think it was 115, so it's a 2-point run to the downside. Apple got a bite taken out of it, but it's making a V-shaped recovery. If it gets up to 90, I would look for a new short under 117. So if it loses 117, again, that's support because it's right there. The short would say 116.70 or so might make sense for a short. I wouldn't be fooling around with the long up in this region. KCAC trying to do a little bounce here. But really, the main thing to pay attention to is the stock market. And whenever you see this stair step down, this is a downtrend. Lower lows and lower highs, right? It's stair stepping on the down low. That's a critically important line for today. Right near 342.5 on the S&P ETF to spiders, or the S&P itself would be around 342, 342.10. Anyway, the main question is, does the stock market end the day below this line? And if it does, that's definitely a bear market reversal, or at least a downtrend correction confirmation if we end the day down under 342.1 here. If we end under that line, that tells me that I want to feel comfortable about my inverse positions and maybe even scale up a little bit into the close if the market stays under that yellow line. As a trader, one thing I teach traders a lot of is not only the micro, gap runners and two-day high breakout momentum plays, but also how to integrate the stock market readings like the S&P and the market internals like the ARMS index, the trend, which you can see at the right center of the screen. That blue line in the rightmost portion of the screen under the alerts table. That's our ARMS index. And you can see it's currently a little bullish at 0.8. That's because the market's been on a little uptick. But I want you to learn how to trade markets first and then instruments second. So I always spend a lot of time going over not only the S&P and its direction, but really what that means to you as a trader when you're looking to seek to profit from that, potentially by trading instruments like I traded. And I called my members at 16:05 this morning at TISA, right? So just as the stock market has a stair step down, our inverses have a beautiful stair step up, right? And to the best of my knowledge, I'll let you guys be the judge, but I'm definitely the top inverse educator. I know how to trade these guys, and if you want to learn how to trade these instruments for day or swing trades, join me in my live room at Trading the Open. That was good. You can see the alerts. I told my members long if it gets over 22.7. Back when it was right underneath that, it made a bear cup and it lost support at 22.50. And as soon as it lost 22.50, I said, hey guys, wait for it to flip over 22.7 and then go long. That was my best SQQQ pivot call in my life, was today. 22.7 long SQs was brilliant. It ran up several points. TZA was a bullish cup whole number breakout. I said to go long at 16.05, and we sell here into the pullback as well. SOX is 45.3 had been the long trigger, and it ran up over a point for him before pullback. I would actually re-engage with this. I'd rebuy over 45.30. Now you guys should thank me for this. UVXY is a buy the dip, sell the rip instrument. We are at a dip. You buy the dip. Not a trade recommendation, but go long over 28.7, which is my first initial long trigger this morning. I would rebuy if it gets over 28.7. I want to short it if it loses 27 whole number. But if it bounces over 28.7, we hit it long with a protective stop and no further down than the 28. So we'll give it a 70-cent stop loss. And this is a pivot pattern. A better pivot pattern would be if this guy dropped down to 26 and bounced, and then we go along and say 26.5, or 25 and bounce, or 24. But be that as it may, we're in a bear cut pattern. But what I like is it's got an ascending, uptrending set of points on the bottom side. So we'll see where it goes from here. But 28.7 would be the earliest for a pivot long in UVXY, with the protective stop at 28. Now I'd rebuy over 29.7 and again over 30.7. I'd sit out I would not be trading. I would not be buying the region up there near 31, 32, because that's too close to the 32 resistance. This is a good example of why you use trailing stops. You get these parabolic arcs oftentimes. You know, I said to go long 28.7 pre-market or earlier in the day, earlier this morning, and then I told my members we sell it right under the 31. And that made sense because it came right back down to the 28.7. All right, what else do we have going on here? Let's take a quick wrap up look at some of these charts. Of the inverses, I like T's are the best because it's up the most, 8.8%. Definitely worth taking a shot at new highs anywhere, and not a trade recommendation, but where I traded it this afternoon, I traded over 1730. 17.3 would be entry number one with a protective stop at 17. So long there with a protective stop here, and then long again up at 1810. I would not, don't fool around with it in the high right under whole number region. Then this is a sell zone. The 0.8s, 0.9s are usually sell zones. So you can get in early at 1730 for a first sign of a bounce with the stop here. Okay. 1730 and then again up at 1810. But initially this morning we went long right there. Now you notice the power and the potential of using the 2-day charts, because the 2-day chart tells us previous day's open, high, low, close, and price elasticity, and shows us the average volume and how far it runs before it slows down. The answer key to each instrument is often found in the previous day's chart. They look very similar, right? It's not identical, but if you cut and paste yesterday's chart on top of today's chart, kind of sort of close. Kind of sort of is. If you look at the SQQQ chart, you can see price elasticity, the average true range, the daily trading range. Is a little bit higher today, but pretty much identical. Let's see, the previous day's range was 20 to 23.20, so a 3.2 range. Today's what, 22.30 to 26.30. So again, a 3-point range. Yeah, so it's got about the same range day over day, which is why I trail a stop when I'm in a winning trade and it's run up on the current day as far as it ran up in the previous day before pulling back or chopping around. That tells you to exit the trade on a pullback, which is where I got out. So that's why I use the 2-day chart. It gives you kind of a visual template of price action and price elasticity, along with the volume and the open range breakout heights, pullback depths, the intelligence, the specific nature of, how to trade that, all types of things that I teach in the live room. So anyway, we've got a hot market, and with the S&P losing ground the last couple of days, the big question is going to be, what does the weekend effect have? Kind of wrap things up here. In the last several months, Mondays have typically been green, which is unusual. Big picture over 20 years, of all days of the week, Mondays are usually the days most likely to be red because of weekend news. Now, Mondays close because of Labor Day, so the market opens on Tuesday. So we have a 3-day weekend. And because of that, and I think that's one reason why you see so much aggressive buying in these inverses with the 6-month record high volume for some of them, like this guy, is because anticipation of possible bad news over the weekend will lead the market even lower next week. So I'm placing my bets. I bought a handful of inverses, and I'll be scaling into those significantly both day and swing trading next week. It'd be great if you could join me in the live room at tradingtheopen.com. Give yourself the gift of knowledge. Famous cliches for 100, Alex. Tell them what they want. Anyway, you can join me for live classes 5 days a week where we meet 8:45 until 10:30. Often, well, 11, like today, I was around till after 11 o'clock for my members, but I'm there minimum 9 to 10:30, 5 days a week, and you get specific signals and criteria and explanations. And I'm often trading my own alerts. I don't trade them all because there's too many to follow, but I do often trade my own alerts like I did this morning alongside. So I'm a real deal. I'm the real thing. I actually really trade. Plus I teach, and I hope I can get you up to speed on how to do it the right way. So that'll wrap us up for today. Thanks so much for being here. Do pay attention to things like not only the inverses, but other charts that are in motion, that are doing well despite what the stock market's doing. And join me at Trading the Open. It'd be great to have you as a member. And if you're a returning member, welcome back. I would get the year plan for the $9.97 because that works out to 80 something a month. So it's under $100 a month for me. You know, and I'm an industry professional. I'm the founder of the original day trading university from back in the 90s, and I've learned a few things, and hopefully I can help you learn as well. So thanks for being here. I appreciate it. Take care. Have a peaceful, relaxing Labor Day weekend. Remember, capital markets are closed on Monday, so we're not going to meet the live room on Monday. And hey, thanks, Jim. Yeah, I miss doing them on Saturdays too. I just need to take Saturdays off for a while. I'm tired of doing that. I've been doing Saturdays for like 10 years, so. But yeah, I will probably bring back Saturdays next year sometime. In the meantime, Fridays are good. Second spot. But even better, you can join me to the live room 5 days a week with live walkthroughs of these charts. So anyway, hopefully, you know, I've demonstrated some skill and some expertise and some help in developing not only an approach, but the entries and exits, and back it up with live real money trades I'm doing myself as well. So a lot of authenticity and integrity and professionalism, and I hope to see you as a member at tradingopen.com. I'm Ken Calhoun. Thank you so much for being here. And again, for now, I don't know when I'm going to stop the sale. It's been on sale for the last week or so. You know, if during your trial membership you want to upgrade to annual, that's fine. You can do that. Or if you've been a trial member before and you know how good the room is, just go ahead and join. There's a link, blue button. Look for the blue buttons for tradingopen.com. You can get the annual membership at just $9.97. So, anyway, take care. I'll see you guys next time. Have a great weekend, and let's kick Wall Street's butt. Maybe we have a Wall Street apocalypse on our hands. I'm not going to call it that unless the S&P loses 3,000. It's got a long ways to go before it does that. So, but we do have a sell-off in progress, and we'll see if we can capitalize on it again next week as well. It's been great having you all here, and I appreciate your time, and I appreciate y'all for being here. Let's trade smart, make it a team, make it a community, and I'll see you in our live room sessions. And I promise I don't do crappy under $10 low float stocks, and I don't claim to be making $5,000 a day, and I don't claim to be turning peanuts into steak dinners and all kind of stuff like some of these guys out there. I'm a battle tested veteran who's been doing this for 2 decades. So anyway, you guys have been great. Thanks for being here, and I'll see you hopefully in the live room next week. And if not, I'll see you in the next Friday session as well, and we'll see where things go. And I'll show you how much money I've made or lost. But we'll see which way the week brings us next week. So anyway, take care. Have a peaceful Labor Day weekend. And best wishes for success in your trading. We may finally be at a tipping point in the market. And I'm the best guy I know to teach how to trade inverses because I've been trading these things for well over a decade. So I've got tons of experience trading inverses. And during this market downdraft that we've got, I'm the go-to guy that you want to learn from. So do be sure to join me, and I will see you next time. Bye for now.